Imagine you're holding a 500 rupee note. You know exactly what it is. It's anonymous, it's physical, and once it leaves your hand, the government doesn't know if you bought a book or a black market cigarette. But as of 2026, that reality is dissolving. We are witnessing the birth of a new species of money, the Central Bank Digital Currency, or CBDC. In the red corner, we have China's Digital Yuan, or e-CNY, a project 10 years in the making that is currently redefining the very definition of a deposit. In the blue corner, India's e-Rupee, a late bloomer that is trying to do the impossible, convince a population already obsessed with UPI to switch to something that looks the same but feels fundamentally different. The uncomfortable truth is that this isn't just about faster payments. We already have those. This is about the programmability of your life. For the first time in history, the institution that prints the money can also decide exactly how, where, and by when you are allowed to spend it. In China, they've experimented with expiring money, digital yuan that vanishes if you don't spend it by a certain date to jumpstart the economy. In India, the RBI is testing purpose-bound money, ensuring a subsidy meant for fertilizer can only be spent at a fertilizer shop. The era of dumb cash is ending. We are entering the age of smart money, and it's a showdown for the soul of the global financial order. This matters right now because the rules of the game just changed. On January 1, 2026, China officially upgraded the digital yuan from digital cash to digital deposit money. It's no longer just a pilot, it's an interest-bearing liability on bank balance sheets. Meanwhile, India has surged past 10 million users in its own retail pilot, with the e-Rupee circulation crossing the 1,000 crore mark. But behind the flashy apps and the de-dollarization hype lies a complex web of surveillance, control, and a desperate race to see who can build the world's first truly digital superpower. To understand how this works, we have to strip away the slick app interfaces and look at the plumbing. Most people think their digital bank balance is money. It isn't. It's a private claim on a commercial bank. If that bank fails, you rely on deposit insurance. But the e-Rupee and the e-CNY are different. They're direct liabilities of the central bank. It's the digital equivalent of holding a physical note issued by the RBI or the PBOC, but without the leather wallet. China's system is built on a two-tiered architecture. The central bank issues the e-CNY to commercial banks, who then distribute it to you. It's designed to be decoupled from the traditional banking system. In a crisis, the People's Bank of China can inject liquidity directly into your digital wallet, bypassing the sluggishness of traditional loans. In 2026, we're seeing this evolve into a tool for precision-guided economics. Imagine the government wants to boost the local tourism industry in Chengdu. They don't just lower interest rates, they airdrop digital yuan that is programmed to only work at hotels and restaurants in that specific city for the next 48 hours. If you try to buy groceries or save it for a rainy day, the transaction simply fails. India's e-Rupee follows a similar two-tiered model, but it faces a unique psychological hurdle: UPI. India already has the world's most efficient digital payment system, so why build another? Because UPI is just a messaging layer. It's a set of pipes moving money between private bank accounts. The e-Rupee is the water itself. The uncomfortable math here lies in the settlement risk. Every time you use UPI, a bank has to settle that transaction later. It's fast for you, but heavy for the system. The e-Rupee settles instantly. No clearinghouse, no middleman, no delay. But here is where the tension tightens. For this system to work, the central bank must have a God view of the ledger. In China, this is marketed as managed anonymity. They claim small transactions are private, while large ones are tracked. But the reality is that the state holds the master key to the ledger.
In India, the RBI has been more cautious, publicly wrestling with how to replicate the anonymity of physical cash in a digital format. The irony is palpable. We are trying to build a digital version of the one thing that was never meant to be tracked. As these pilots expand in 2026, the data being generated isn't just about what you buy, it's a real-time heat map of a nation's economic heartbeat, visible to the central authority in a way that was historically impossible. The hype promises a frictionless utopia, but the reality is hitting a wall of human habit. In China, despite the e-CNY being integrated into WeChat Pay and Alipay, the organic adoption rate remains a struggle. People don't switch to a new currency just because it's sovereign. They switch because it's useful. Beijing is countering this by paying civil servants' salaries entirely in digital yuan and mandating its use for public transport. It's a top-down push where the state is not just the referee, but the primary player. India faces a different paradox. The e-Rupee is being marketed as a tool for financial inclusion, yet the very people it aims to reach, those without stable internet or high-end smartphones, are the hardest to onboard into a digital-only ecosystem. The RBI is now testing offline functionality, allowing chips to swap value without a network. But as of 2026, the skepticism remains high. Why would a merchant in a Tier 3 city switch from a UPI QR code that works perfectly to an e-Rupee wallet that requires new technical overhead? The answer usually comes down to the hidden mechanism of the interbank fee. CBDCs are cheaper for the state to maintain than the massive infrastructure required to print, transport, and destroy physical paper. Now, zoom out. The stakes aren't just about domestic convenience, they're about the mBridge project, the cross-border bridge connecting China, Thailand, the UAE, and Hong Kong. This is the real digital Silk Road. It allows these nations to settle massive trade deals in hours instead of days, completely bypassing the US-led SWIFT system and the US dollar. If India joins this or builds its own bridge, the entire geopolitical map shifts. We're looking at a world where economic sanctions, the West's favorite non-kinetic weapon, become obsolete. If you can move value across borders on a private, state-run ledger, no outside power can turn off your economy. But this brings us to the ultimate risk, the fragility of a single point of failure. If a central bank's digital ledger is compromised, it's not just one bank that goes down, it's the entire national currency. We are trading the messy, decentralized resilience of physical cash for a hyper-efficient, highly centralized digital hive mind. The question we're left with isn't whether digital money will win. It already has. The real question is what we're willing to trade for that efficiency. If your money has an expiration date, or a GPS tag, or a permission filter attached to it, is it actually yours? Or have we simply replaced our leather wallets with a high-tech leash?
The showdown between the e-Rupee and the e-Yuan will decide more than just which app you use. It will decide if the future of money is a tool for liberty or the ultimate instrument of state control.